Hey guys, so today's video is about barter transactions. It's a topic that I have noticed not many people know how to accurately account for it. So we're going to go over how to deal with these transactions. But before we do that, if my videos are helping you, please do subscribe to the channel. So let's get started. What are barter transactions? These type of transactions are where you have a customer who's also your vendor, right? Or a vendor who's also your customer. What people think in general is, let's say, my customer buys goods and services from me for 20,000 and I buy goods and services worth 15,000 from them. Now I can record 5k worth of income, but that's not the right way of doing it. You still have to show $20,000 of income, 15,000 of expenses. But how do we do it correctly in QuickBooks? So there's a specific type of setup for this in your QuickBooks Online that you have to do. So let's go over that setup. First thing we're going to do is we are going to go to our customers. So we're going to create this new customer here. Let's say the name is ABC Printing Corp. Okay, save. This is our customer. Now, since QuickBooks has a restriction where you can't have the same name for more than one customer or vendor, so we have to have a slightly different name for our customer when we also add them as a vendor. So let's do that. We go to expenses and vendors. Let's create a new vendor here. So ABC Printing Corp, but we are going to add we, okay? But here, since we have to still issue checks to ABC Printing Corp when we do need to, we are going to make sure that the name is correct on the checks. Okay, we save it. So now these two things are done. We have added them as a customer, we have added them as a vendor. So third type of setup we have to do is an account, a bank account that exists in QuickBooks only. And we will do that by going to accounting, chart of accounts, new account. I will name it as Barter Clearing Account. Okay. And this specifically we're going to use only for these type of transactions where your customers are also your vendors. And this is going to be a bank account. Yeah, we can call it cash on hand. That's fine. And you can put a description here if you want. Okay, save. So now the setup is complete. We have added customer, vendor, and bank account. Again, this bank account only exists in QuickBooks. This is not a real bank account that you have to open separately. Okay, so setup is done. Now let's see how to do the barter transactions accurately in QuickBooks. So first we will go to our customers. So we go to our customer and we issue an invoice. This is a normal invoice, just like you would issue an invoice to any other customer. That's $20,000. That's the amount we had picked for this. So save. It's a normal invoice. Okay, we're done with the invoice. Now we go to our vendors, go to ABC Printing Corp. Now let's create a bill from this vendor. We assume that amount to be 15,000, so we're going to create a bill for 15,000. Stationery and printing expense. Let's say $15,000. Okay. Now this is done. So we have added one invoice, one bill, just like you would do for any other vendor or customer. Okay, now let's say you have an agreement with this customer slash vendor where if they have a bill and an invoice open with you as well, you can offset one against the other. So we have $15,000. We have to pick the least amount. Least amount is of the bill, 15,000. So this is how much we can offset their invoices by as well. So 15,000. So first we are going to create a bill payment that we are not really paying them, but we are offsetting it. So the way you do it is you would go to this bill, you would say mark as paid. When you do that, since there's no actual payment going out, we are going to use the barter or clearing account for this. And the payment date is going to be whatever date you are offsetting this. Okay, so your bill is being paid. Okay, save and close. So now your clearing account is going to show a negative $15,000 balance because we recorded $15,000 payment there. Okay, let's go to customer side now. Customers, let's go to our customer and open invoice for them. Okay, so out of this, we can offset $15,000 with that vendor bill that we just marked paid. We are assuming we have paid that $15,000, but we also have to offset the customer invoice by the same amount. So let's do that. Customer, so this is the invoice we are offsetting. Click on receive payment. Just like we used the barter slash clearing account for vendor payment, we're going to use this account for customer payment as well. And now the amount received is not $21,600. The amount is $15,000. That's the amount of the bill that we offset. record and close. What this process did was it created income for you for $15,000. It created expenses for your company for $15,000, right? And now if we go to barter slash clearing account, if we go to that account, you can go to chart of accounts or look at the balance sheet. We're gonna run a report. You see how $15,000 payment is recorded and payment out is recorded as well. None of these actually happen, right? It's just offsetting one with the other. But that's how you would record a transaction where a customer is also your vendor. Now you still have a balance on your invoice, the customer invoice. That depends how you would clear it. You might buy more stuff in future from them, or you might receive a payment from them. But this is how you do the accounting correctly for these type of transactions. Okay, hope it's helpful for you and happy accounting.